look at an example too. Jill Accardo, MD, maintains the accounting records of Accardo Clinic on a cash basis. And we need to take the information that we have here on a cash basis and convert it into income on an accrual basis. So we're going to show income on the cash basis. We're going to show income on an accrual basis. Let's start with, we know the cash receipts. We're given that information, cash receipts of $142,600. And we need to figure out what adjustments do we need to make to get to revenue on an accrual basis. One adjustment we need to do is for this increase in accounts receivable. Accounts receivable went from $92.50 to $15,927. And this is an increase of $6,677. If accounts receivable increased, this must mean that cash was not received, but services goods were provided or services were provided to the customer, and revenue was recorded. So we're going to add, under the accrual basis, add the increase in accounts receivable of $6,677. We see that unearned revenue went up $28.40 to $41.11. This is an increase of $1,271. When unearned revenue increases, the other side of that must be that the company received cash in advance of services that need to be performed in the future. The company owes services to the customer. So cash was received, so cash revenue of $142,600 includes this increase in unearned revenue, but it's not going to be included on an accrual basis, so we need to subtract out the increase in unearned revenue. This gets us to our revenue on an accrual basis of $148,006. Let's do something similar for the expenses. Cash paid for expenses was $55,470. We need to adjust that. We have a decrease in accrued expenses, 3435 to 2108. That's a decrease of $1327. So what happens when accrued expenses decreases? It must mean that more cash was paid than expenses were incurred. So this cash expenses of $55,470 is too high. We need to subtract the decrease in accrued expenses. And for the prepaid expenses, these are prepaid assets. They increased 1917 to 3232. This was an increase of 1315. And what does this mean if it increases? It means that the company paid out cash of $1315 to get prepaid rent or prepaid insurance, but there was no expense. So a cash payment was included in this $55,470, but there was no expense. So we need to deduct from the cash expenses the increase in the prepaid asset or prepaid expense, $1315. This gives me this gives me expenses under the accrual basis of $52,828. Okay, so if I want to look at net income, income on a cash basis is cash receipts of $142,600 minus the cash expenses of $55,470. This would be cash income of $87,130. And income on an accrual basis would be your revenues of $148,006 minus your expenses of $52,828. Net income on an accrual basis is $95,178.